So you know how I mentioned the entrepreneur gene? So that usually comes along with a lack of organization. We were profitable in every single country. We de-risked every major risk. Then it kind of becomes boring, right?
BFM 89.9, good morning and welcome to Open for Business, the show that dives into the journeys and ventures of entrepreneurs and business leaders. This morning on the show, Junaid Wahedna, the founder and chairman of Wahed, an investment platform that caters to the needs of the Muslim community by offering Sharia-compliant investment solutions. Following his experience working on Wall Street, Junaid left his lucrative career and founded Wahed in 2017 in a bid to provide an investment platform that allows Muslims to avoid interest-based investments. Today, Wahed's core service includes a diversified Sharia-compliant portfolio, giving investors exposure to equities, gold, and other assets. Starting from New York, the company has set up 11 offices and is operational in 4 of them, including one here in KL. Along the way, they've raised about $75 to $82 million, with the most recent round being a Series B round in 2022 for $50 million, valuing the company at $300 million. Here in Malaysia, Wahed's been around for 5 years, getting its DIM or Digital Investment Management license from the SC back in 2019. Today we're going to get into Junaid and Wahed's journey from its origins and how it's evolved over the last few years to Junaid handing over the CEO role just a few months back and key ambitions ahead. Junaid, welcome to the show and welcome to KL.
Thank you, Roshan.
So we've obviously had a bit of a chat outside and there's going to be some interesting things that we're going to cover today, but I found online that this idea all kind of started off in a taxi ride that you had back in 2015. Now, you can't always trust 100% what you read on the internet. So question number 1, is that a true story? Question number 2, what was it about that conversation that inspired all this then?
Yeah, that's absolutely a true story. So in New York, especially in Manhattan, you just jump in the cabs all the time, and there's a lot of immigrants, and being a Muslim, being a minority in New York, it's always nice talking to the taxi drivers. You have some familiarity type of thing, so you strike up conversations quite regularly. And I remember quite vividly, I was taking a cab to work, and we started talking. The driver was from Bangladesh, and he was asking me what I do, as the conversation goes. And I told him I'm in finance. So it just naturally evolved to, what do I do with my money? I have so much in savings, and it's all in Apple stock. It's like, wait, why is it all in Apple stock? And he said he came to America with his whole family and his entire life savings. And then he didn't know what to do with the money. He didn't want to keep it at a bank because he's, a practicing Muslim and he doesn't want interest. And he didn't know where to invest it. So he went to the imam to ask him what to do with the money. And the imam of the mosque, the religious leader.
Yeah.
Of course, it turned out to be very lucky advice because Apple did weirdly well, better than any portfolio I can think of. But from a risk-reward spectrum, you shouldn't be putting all your money in one stock. He put all his money in Apple because Sharia, the imam told him that it's Sharia compliant. And just because of his faith, he gambled his entire life savings. I shouldn't say gambled. He invested his entire life savings in one stock, which we as financial professionals really caution against. You should be diversifying.
I mean, that stresses me out just hearing that.
It's very stressful.
In a parallel world, I actually sold my Apple stock back in 2017 because it became such a huge part of my portfolio. It was 90% of my assets, and from a risk-reward perspective, you got to pare it down from there. So that's where this all kind of started, right? But you already had this career on Wall Street. You gave that up, basically, that lucrative career there to build this. What was behind, I guess, that conviction and confidence to pursue this? Was this something that you thought about at the time? Because not everyone thinks about this before they jump in.
So, to be honest with you, there's no one specific reason, right? With life, you have many different factors. You have family, you have work, you have your stress levels, you have your academic background, you have your faith, right? So everything has a role to play, you could say, in that decision making. So it's hard for me to say one specific thing. But to give you a bit of a background, I could tell that the work I was in, very fast paced, you learn a lot, very lucrative, like you won't believe how much money is actually in New York. But you have no time. and you feel, or I felt as a person trying to be a good Muslim, I felt that I'm going away from my religion. And that was a really big part in my decision making, saying, you know, what's more important to me? And I can't act like it's a 0 to 100 story, because I do come from quite a well-off background. So I was in a comfortable enough position where I could decide to not pursue only money and do something that'll make me feel a little more fulfilled, but at the same time also challenge me intellectually, because it was something cool, it was something new, it was something that had never been done at the time. So those are a few factors that played into why I started Wahid then.
One of the interesting parts of your journey, one of the many interesting parts of the journey, is the fact that you've done this as a solo founder. As a solo founder, you've gone to 4 markets, you've got licenses in 10 different geographies, you've raised between $75 to $82 million based on press reports, and all doing that without preferred stock. You did that all with common stock. The conventional wisdom would be you need at least one other founder to kind of diversify that risk. Why didn't you bring someone along for the journey? Did you not find the right person to take this on with, or was it always a decision to not do this?
You know what's interesting is that it goes a lot into human psychology and how people are. And if you look at a lot of entrepreneurs and their personality types, they are very autocratic. And it's very hard to find that specific, let's say, entrepreneur gene, as they say, to be democratic from day one. In fact, I don't think it's possible. And I highly advise people to be solo founders, because there's no stress in life. You can take a decision. All your investors end up being your partners anyways. They're shareholders, as you are a shareholder. Because what does founder really mean, right? It's just your responsibility. And when someone comes and invests into your company as a shareholder, then it's their responsibility too. And when there's an employee, it's their responsibility too. So it's just varying degrees of responsibility. I do not feel like the 50-50 split ever works. Someone always has to have majority. Even in companies, if you see companies that are too spread out in the shareholding, they become really slow, very tough to take decisions. They become bureaucratic. It really helps when you have a single decision maker. That's why if you look at these really fancy private equity firms, they only take controlling stakes. So if it was wise to be dividing up and running completely democratic organizations, why do the people most successful at making money insist on having control stakes? So what you mentioned as conventional wisdom is more, I'd say, VC conventional wisdom, and that's because the VC's job in life is to maximize the IRR of their portfolio. And the biggest way to do that, if you look at the math behind it, is to de-risk the companies they invest in and just try and minimize their failure. Now, the biggest failure is obviously the guy you're betting on, right? You're betting on the person. What if he leaves? What if he decides he doesn't want to do it or do something else? And that's why having more than one founder de-risks that major risk the VC has. And I think that's why they like, or maybe insist upon, more than one founding team member. But for the entrepreneur himself, I definitely don't think it's better.
I think you've made a really great point, right? Because sometimes you got to look at it from whose perspective are we talking about here. Now, you've raised a lot of money, $75 to $82 million, depending on the press reports. And you've done so as a solo founder. How much convincing did you need to do in order to get people on board with this? Don't worry, I'm a solo founder, but I'm not going to burn all the money you're investing with me. Like, how did that conversation go?
I'm a strong believer in putting your head down and doing the work. And if your product is good enough, money will find you. And the way that works is, let's say you get one investor and you're a really good company. He's either going to invest himself or get 10 more of his friends, because he looks good, bringing them a good deal. So there's no dearth of money if you are a good entrepreneur, or good enough of a business. I shouldn't say, entrepreneur, because some people find it harder and easier, and there's different money in different places. We started in America. America has a ridiculous amount of money, especially for VC. They also have a culture of taking risks, which is from what I've seen, and I may be wrong, not prevalent in Malaysia.
No, you're about right.
Yeah.
It's a common complaint that we hear.
Yeah, so Malaysia has more of the European, like the British mentality, right? Which is very, let's take it slow, easy, not take any risk, which is why there's no tech scene in Europe either. And they're all confused, why is there no tech scene? Because nobody takes a decision, right? Even today, if we're talking to an organization who wants to invest and they're going to decide 9 months later, it's, sorry, we're not going to be around that long. You need to decide in the next 2 weeks, right? Regardless of how big the ticket size. I remember our first American investor made a decision in maybe a week and a half and sent us $1 million the next week. Like it's just unbelievably quick. And I'm saying early stages. So I do feel the culture of investors has a lot to do with it.
Now, 9 years on from the original idea and that taxi ride that you had in New York, in Manhattan, earlier this year, you officially handed over the role of CEO to Mohsin Siddiqui, who was COO last year. Why have you handed over the role of CEO and elevated yourself to chairman? Talk to us a little bit about that.
So, I want to summarize a bit in terms of different people being good at different things. So, how I mentioned the entrepreneur gene. So that usually comes along with a lack of organization, more creativity, like people being spontaneous. Mohsin is an operator. That's what we refer to it in in the industry. He's a machine. He takes companies from 10 million to 100 million revenue all day, every day. He's done it twice before. That's what he's built to do. He knows exactly how to do it. Entrepreneurs like to build from 0 to 1, right? So my job was proving that something nobody else thought was possible is actually possible. So the moment we had product market fit, we were profitable in every single country, we de-risked every major risk, then it kind of becomes boring, right? Then it's like, now okay, you've done 3 countries, now do 30 countries. Okay, it's just, where's the fun in that? So, I'm not to saying it's not fun work. I mean, he has a fun job and all that in case he's listening. But I want to do, the new countries, the new challenges, the new products. And I get to do that in this new role, you could say, when the day-to-day operations are completely with Mohsin. Because you won't believe running a global financial institution, how many things there are to deal with. Regulators, compliance, operations, the support side. It's non-stop firefighting every single day. And you have to be very disciplined. All right. So he has that personality type. He's very smart. He's very good at it. There's no doubt in my mind he's better than me at doing that. He's a good manager. Right, so he has skill sets I don't have, and for this next phase of growth, and this is a very nice phase for anyone to be part of, because look, it works, it's de-risked, and now you just grow it and make it something huge, inshallah, right? So I feel that my skills can be better utilized trying to create new products, trying to figure out getting into markets that other people haven't figured out yet, and that's how I'd explain and why we did that.
For lack of better words, you're a builder and he's the operator.
Correct.
He's a scaler at this point.
Correct.
Now, a key challenge that comes about when you bring in professional management is alignment of goals, vision, incentives. How will that work with Mohsin? How do you get him bought into the larger goal here?
Yeah. So there's a few things, and some are particular to us, right? So we are a Sharia compliant institution. We are very values driven. Our vision of the company is to try and create products that help the Muslim community get away from interest, which we feel is a big sin, and we feel there's a lot of spiritual reward in doing so. Mohsin and I both really appreciate that specific benefit that we are not able to get in any other role or any other business. So that's unique. Now, in terms of aligning interests, so the American way, again, might be a bit different in Europe and here, I don't know, but the American way is you really incentivize with options, right? Stock options. So it's basically the private equity way. If you do well and you hit your targets, everyone wins. You get rich, I get rich, shareholder gets rich, everyone goes home, right? And if you don't do well, you don't get anything, and we find someone else to try and figure it out. So that really aligns incentives. Again, the more slower companies would not do that. They just pay a higher salary. Here's a driver. Here's a that. That's not what we're into. We're saying, look, you come in, you have a 5-year stretch, you hit these goals, and we take this company, we 10x this company, and it's already big. So he's come to do that. Again, he's very good at it. He's done it before for really big global institutions, a lot of them in finance. So we're quite confident in his ability to do so.
Let's go back to the beginning here. When you first started executing upon this mission, on this journey to build this company, what did Wahid look like when you first started?
So I was very young when I started. I was maybe 23 years old.
Wow.
Right? And so for me, I was very naive, right? The naivety of youth. It's, wow, how hard can this be, right? Like, you just throw together a platform, manage money, everyone needs it. So I remember, first thing you have to do is get a regulatory license. So how do you usually do it? Today, if we were to apply for a license, you'd get lawyers, you'd get this, you figure it out, a long timeline, all of that stuff. What do? I fill out a form, right? So I'm like, okay, let me find someone else's forms, ADVs, and I make my own, because you don't have that much money, you don't have that much capital, and I just applied for a license and, got a few people I knew in the industry to be part of it. Oh, can you be the compliance guy? Can you be there? And we got the SEC license. So first time round, probably the fastest license we've ever gotten till today was when I just filled out, drafted it myself, copy pasting stuff, right? So whatever lawyers say, copy pasting is still the best way to do it. I mean, I know they need to justify jobs, but it's either they're copy pasting or we're copy pasting. So it worked. We got the SEC license, and then I have a business plan, I have a license, and now you need to actually build the infrastructure and the tech, which costs money. So again, reaching out to a few contacts I know. And I remember there was a gentleman from McKinsey & Company at the time. He was a partner. He was the global head for Islamic financial services. And he was the first one to really understand the concept, right? And the business plan, the idea, you can say. And he took me, he was like, if this works, it's a bit crazy. And then he took me to someone else, who took me to someone else. And the next day, these 3 guys called me saying, look, Junaid, this really makes sense. We've built all these Islamic banks, all the governments hire us. And we know the industry, we know basically everyone in the industry. So there's no financial products for retail. No one's ever solved this. And if you can do it, it's going to be huge. So we want to invest with you. We want to become your partners. Here's $1 million. And they were, you could say, the first angel investors. So that's, I would say, day one. And then we use that money to, of course, build the prototype platform. Now, $1 million is a lot of money, but not in financial services, not in America, right? So with $1 million, you need to build financial infrastructure, a tech stack, have the initial team, all of that. So our prototype was a simple website. It was a web portal, and we had connected, to the brokers in the back, and we launched with that. And luckily, it was enough for an MVP. So we got the traction. We clearly saw the product market fit, and that's when the first institutional investor contacted us, saying, I don't Basically, they said, we don't think you realize how big this opportunity is. You can make this really global. So how much money do you need? And the rest, the rest was history.
So that's the early days, and it really did kind of fly off the handle once you started this journey. One call leads to another, and you raised the money you needed. $1 million at the start to build a product didn't go as far as you would want, or at least doesn't go as far as we think it does in the US. So it raised more to do so. Now, the way you talk about it, it sounds like it was all just one easy joyride. What was the big challenges at the start, right? What was the biggest challenge getting this up and running?
I think the biggest challenge was people just not agreeing with the hypothesis, because as a founder, you have an idea and you have to be stubborn enough to basically say, I'm right and every single industry professional is wrong. That's not an easy thing to do or say, and chances are you are wrong, right? Because everyone's saying it's not possible. So I remember at the start going to basically every senior person in Islamic finance I could reach, and one after the other, they were all like, this is a silly idea, it doesn't make any sense, no one needs this, it's not going to work. Even when I went to them with ETFs saying, look, there's a more efficient way to have funds. Why do you guys have mutual funds charging 3%? It makes no sense. Just have passive. And they're like, no, impossible. It's not going to work. Da, da, da. So unfortunately, we didn't get that, you could say, reassurance from the industry at all early days. So all of our initial investors who did understand the data and the business plan, they weren't actually Muslim or Islamic finance people. I'd say it was very interesting, right? So there was
They knew the value of a good idea and the potential size of the market.
And they even understood the Islamic hypothesis. It's just not rocket science, you know. It's we want to keep our money away from this and invest in simple things. And you look at the data and it makes sense. So it's a bit, I'd say, sad from one point that our community doesn't take that risk that we need to innovate. But times are changing, things are changing, and I think for us to be able to be quote unquote successful with something, I hope will change people's mindsets and allow more entrepreneurs to try new ideas.
In terms of products, you've done quite a few things. ETF you launched in 2019, very cleverly named HLAL or Halal. You've also got a non-US one, which is UMA, if I got that correct. That was launched later. Outside the ETFs, you obviously have the robo-advisor, which the Malaysian audience will be more familiar with. Equity crowdfunding as well. I think that's Wahed Ventures, a bank branch that you acquired in London, as well as a gold-backed debit card. A lot of things working here. What determines product development at Wahed?
It's a very interesting question, and it's odd answer, not the usual. But there's two things. Okay, one is the problem we're solving requires multiple products, and that problem is we're trying to keep people's money away from interest from all aspects of their lives. So we've actually mapped out where in their lives they are exposed to interest. So there's the whole investment piece, there's the mortgages, there's the banking piece. There's many different parts of your life where you're exposed to interest, and we innovate product to minimize exposure to interest, or ideally just remove exposure to interest from all aspects of your life as a practicing Muslim. So that's, I'd say, the key factor in deciding what products to push. The secondary factor, which you could argue is more important as a for-profit business, is unit economics. So we really do look at how will this affect our unit economics. And when I say that, I mean, revenue per user, the cash flow, the lifetime value, the retention. So that's, I'd say, a big part of our decision making.
So let's talk a little bit about that, because the robo-advisor business itself, notoriously difficult to get to profitability or break even. I think Benjamin and Wealth Fund took about a decade, more or less, and even then they had to go to other products to do so. I spoke to Stashaway a few months back. They are on the way to profitability. We were talking outside, and you are now profitable in all four of your markets as a group, still not profitable yet. How did you do that?
So every single one of our countries is profitable. So the proof is in the pudding. We know this works. We know it's profitable. What's very interesting now is the fourth country, which we just launched, the UAE. And what we're trying to do, and it's a test for ourselves really, is to see how quickly we can break even that country. We just launched a few months ago, and we believe we can break even in the first year. And we are well on our way.
Wow.
So we should be able to break even in the first year of operations. Now, what that will allow us to do is something pretty crazy. It basically allows us to just launch every single country you can think of, because the break-even's in 1 year. Now, there's not many fintech companies or financial firms that I know of. In fact, there's none who can break even in a year. It just doesn't exist. So we've built these economies of scale that are pretty unmatched. We're super efficient and lean. Margins are really good. And I think a big key part of this is mixing a very sticky product like robo-advisory, like asset management, where people stay for a very long period of time. They save for retirement, they save to buy a car, they save to go on Hajj, they save for long-term things, with more immediate cash flow products like the ones we're pushing now, like crowdfunding, where you get an immediate placement fee, which is day one cash flow and then nothing really after that, right? So robo-advisory, everyone starts with a small amount of money, they're building up their savings pot. And so you're taking a percent of that. It's going to take you years to make back the money you spent just to acquire them. So in the long scheme, 10 years, 20 years of your lifetime, sure, it still looks good. You'll have your LTV to CAC good enough, but who's going to throw that money down a well, right? It's going to be very, very expensive. So for us, we figured out that we need to combine it with products that have the nearest cash flow stream, and that was the placement fees with the alternative investments, right? The equity crowdfunding, real estate crowdfunding that we do now. So we pushed it in the UK, worked like a charm. It's absolutely gorgeous now. So it's under 1 year payback period. We have the most ridiculous LTV to CAC number anyone's ever seen. I think it's like 100x, something stupid.
Wow.
Like, it's just way too good at this point. Like, good is supposed to be anything over 3, and ours, because all of our growth is organic, it's all referral based, and we only have these global brand influencers and global branding. Our global CAC is ridiculously low. Like, I haven't seen anyone even come close to it, you know? So it allows our unit economics to be really unmatched and allows us to scale profitably and keep launching countries. So next year, we stopped launching countries a few years ago to figure out this whole product suite, monetization, all that infrastructure piece. Now that's done, and it's done very well. We're going to go back to launching countries, and that's the fun part, right? So we get to just every 3 months launch a new country, and we're very built to do that.
What does the path ahead look like in terms of determining what markets you want to go to? Because you've got a mix here. You've got developed markets like the US and the UK. You've got a mix here in Malaysia. Talk to us about that strategy.
So, you know, our strategy is very heavy on our values and the whole faith-based aspect that I was touching upon. So unlike most businesses who will optimize for revenue and profitability, we optimize for how many people we can get to minimize interest exposure, which is a bit weird and crazy. If we wanted to make money, honestly, we would not have left America. Working in one country is much cheaper, much easier infrastructure, way less regulatory risk, and there's more than enough money in America to go to tens of billions of dollars, even with the Muslim community. They're just ridiculously rich. So the reason we did this whole global thing is to be able to go to 50 countries. Anywhere there's someone who wants to minimize their interest exposure, we want to launch. So what we've done is we've ranked countries by literally the number of people who would want such a product. So you're looking at India. India has 300 million Muslims. It has no Islamic bank, and now they're in the middle class. It's a great market. Is that the best from a financial perspective? Maybe, maybe not. I don't really know. You know, it actually is, because it's done quite well. But Nigeria, for example, Indonesia, we've got licenses there. It's not because they're going to be huge margins. It's going to be tiny margins, but we feel it's a responsibility. So our business is always going to be tiptoeing that line between, do we take decisions only for money or do we take decisions for faith? And we're trying very hard to balance both. And I think we're quite strong on the whole values and faith side. We really take decisions that way. I don't know any other Islamic company that goes into India. It's a bit insane, right? But we are doing it because we feel that there's a massive need, regardless of the risks involved. So that's a big part of our decision making.
When we look at that expansion also, I mean, at the end of the day, as you scale, you can use maybe profit centers like the US and the UK to pay for the cost of expansion, really, and you can amortize your technology costs over all these different markets. From a business perspective, what you're doing also is really interesting, and this business, again, few things, right? Cost optimization. How lean can you be as you scale this business? And how much AUM can you collect to charge the fees on? Where is Wahed towards that $1 billion AUM mark? Where are you right now?
So we're definitely there, right? So we're pretty big. We're actually really big now, and we're growing really fast. So what's interesting is, even though we're of this size, which not many people even reach as retail asset managers, we continue to grow top line at 100% a year, which is insane. At this size, people don't do that, right? It's a snowball of money. Now, back to the whole, countries thing. So I wouldn't explain it as the richer countries subsidizing the poorer countries. It may seem that way, but what we've learned is, if we take decisions for the right intentions, somehow it helps out in the long run. So if we were thinking only money, we'd go to Australia, Europe, Canada, right? It's just the natural, they're rich there, easy infrastructure, so on and so forth. What we did, for example, Malaysia, if you were to look purely on data, makes no sense for us to come into, honestly speaking. But what did we get out of Malaysia? We were forced to optimize our server costing, our efficiency for customer support. We were forced to do these things to make money. And because we did them here, they got applied globally. And that helped us tremendously. So all these other guys who are only in the richer countries, they do not have the efficiency we do on the cost side, because we were forced to figure out a way to run on such low margins. And there's a very interesting case study actually that I remember of Harvard Business School, of the steel industry, right, in the US. And there were these steel scrapers basically that existed, and the steel scrapers would do the scrap metal, right? So to make money, the margins were so low that they were forced to spend on technology and innovate to make money. Once they did that, they took over the entire industry and the whole oligopoly broke. And the reason that could happen is because they could make money off scraps. So when they went to compete with the actual, bigger players, they would destroy them because they can't compete with the margins. And that's how we're looking at this. So we like the challenge of being able to make money out of dealing with $100 client or with a 100 ringgit client. We can make money off someone with 100 ringgit. We can go and really take the entire industry if we have to. And that's how we're built. So I like taking good intentioned decisions. I feel they have a really nice, even economic effect in the long run.
In a funny way, Malaysia has forced you to become more efficient with your capital, and I want to claim that we helped you get to profitability, whether that's true or not. In terms of whether it's AUM or revenue right now, between your three main markets, the UK, US, and Malaysia, what's the split like? Because one would assume that the higher currency markets might be bigger parts of your portfolio.
Yeah, it's very interesting. Actually, that's a perfect split in terms of revenue, and I'd say even robo AUM basically. And the reason for that is Malaysia, let's say, has 10 times the population, but 1/10 the wealth per capita, right? Of let's say America. So they're richer but less clients, and over here there's more clients but way less money. For us, we're a tech business. There's really no marginal cost per client. So as long as we're running that same tech stack, which we are, makes no difference. So it's really well split. It's really 1/3, 1/3, 1/3, which is beautiful in terms of revenue diversification, geographic diversification. And again, we think we can do this in 50 countries, right? Works in Asia, works in Europe, works in America. The only challenge remaining is frontier markets like Nigeria, Indonesia. It's going to be tough, but if we can crack that, we're done. We can do 100 countries.
Because that's something you haven't tested yet, right?
Haven't tested yet. We're licensed in Nigeria and Indonesia, but we haven't launched there yet. So we're going to find out.
That'll be interesting.
It will be, yeah.
When we look at your growth, 100% on year right now, that's I think something you said just now. You got a good mix right now between developed and developing nations. I mean, between the three markets that you operate in right now, with Dubai just entering last year. You've also got an interesting product mix, and Wahid hasn't been afraid to acquire in the past. I think estate planning products have been something that you've acquired, a digital banking app in London as well. What determines whether Wahid acquires versus builds? Because underlying all this is not just to be a robo-advisor, it's to get rid of the interest-bearing portion of a Muslim's portfolio.
So our acquisition strategy is pretty straightforward. It's purely commercial, right? So we look at, okay, what's our timeline? Where do we want to get to? Is this quicker and does it make economic sense? So as any company would look at it as an acquisition, you'd see build versus buy, and you'll see if you have any synergies. For us, we've come to a point where we could, in theory, acquire any asset manager or every asset manager and just consolidate, because our efficiency is so much more than theirs, right? We have maybe 1/10 the cost, we have a better brand, we have better infrastructure, and we have the entire value chain. So in theory, we could just go acquire everyone and you'd add value just because your costs are lower, you can scale and you can just cut their staff or whatever. The PE way, right? So acquiring for us is either commercial or does it get us somewhere quicker. Now with the digital banking piece, we acquired a new startup in the UK called Nia, and the reason we acquired them was actually for their infrastructure and their staff. It was an acqui-hire. So you had a really good team, perfectly placed for this product. We knew we wanted to do the product, so it just saved us a whole 1 year of hiring and building it up, and it made economic sense. Hiring is very expensive for these curated products, especially for whole teams. So it's common for companies to acqui-hire. In terms of the estate planning and wills, so in Western countries specifically, the Muslim community has a problem because Islamic inheritance really prescribes specific rules of how you're supposed to disperse money on death, and in Western countries, once you pass away, it's the state law, right? So you have to curate your will if you're going to keep it Islamic. And most people don't know that. They don't do that. So this was really allowing us also to protect the Muslim community's money, to do it how they should and want to do it by acquiring this. It's actually a law firm, and they're the biggest ones in Islamic estate planning in the UK. So we acquired them, and it was the perfect synergy because they had wealthy people with wills who needed asset management. We had asset management clients who needed wills. And we think we can replicate the exact same thing in every country.
One of the key things you managed to optimize for here is customer acquisition, which can be quite expensive for robo-advisors because wisdom would be that you need a human to sell investment products. How have you overcome that?
It's quite interesting. So, financial services in general has a very high cost of acquisition. It's known for that. And that's why robo-advisors majorly have not been able to be profitable or run profitable countries at all. In fact, it's very rare. Our unique advantage is the entire organic growth element, right? The credibility and the brand on the Sharia side that we've created. So most of our acquisition, if not all of it, is referral-based and organic. So again, we spend money on global branding, and that builds this tidal wave of trust and referrals that allow our CAC to be ridiculously low. So there's really no comparison with us and other industry players. Like we've seen the numbers, with the investment banks, and it's just a world apart. We're maybe 1/10 the industry norm, if not even less. So I do feel a big reason for that is the product market fit. It's more of a need than a want product. Our clients don't really have any other options. They're looking for a way to keep their money Sharia compliant, and they have small amounts of money, and where else are they supposed to go? This is easy, it's in your phone, and it's the only option available to you. So that's really driving that low CAC, and now you have the credibility, you have the outperformance. So for someone to try and compete with all of these barriers to entry, it's almost impossible today, especially with our economies of scale. If you look at our performance, if you look at our cost structure, if you look at our portfolios, they're hands down, better than the others, and for many different reasons. One is if a bank tries to compete, or a specific, let's say, government entity, they're going to put their own funds in there, and that's it. They're not going to be independent and objective with all the funds. So for us, what we do, as is our fiduciary duty, is we scan the whole world for funds and we take the best ones. And if ours isn't the best, we don't put it. So other players, you'll see a bank, they'll only put their bank funds, right? So if someone wants that actual efficiency, they want that combined with the really good UI and UX, you're not going to really have many options. You'll have maybe one other, if there are any others. I really can't think of any. So that need is fueling a lot. And then they tell their family, they tell their friends, the credibility is earned, and we're really riding off that wave. Now, the interesting thing is we're seeing that in every single country. That organic growth, which is not slowing down, right? So you have existing clients who are on recurring deposits, so the AUM keeps growing. Then you have the client growth because of the referrals. So it's a really nice growth factor that's just inbuilt into this business. And I, again, feel it's a need more than one. Conventional guys can't do that because there's 50 competitors. So why do I need you? You have to be cheaper, or you have to, really push some crazy campaign on me. Otherwise, what's the need? We don't have that problem.
Now, one of the bottlenecks with Sharia compliant investment products is just the universe of these products. I mean, you yourself had to go and build two ETFs yourself. Is that a concern as you scale this forward? Like, are you going to have to continuously build your own products? Are you seeing other people build products that you can use?
We definitely see it as probably the biggest issue in the market, and we're spending a lot of time continuing to create products. In fact, now that I have more time, that's what I'm focusing on as well. So if you look at the asset class spectrum in Islamic finance, there's really not much at all. This is equities, commodities, and sukuk. And sukuk is just like a blanket fixed income portfolio. No one really knows what's in it. It's really sad and scary, and it's like the worst asset class in my opinion. So our job is initially to try and make that specific fixed income piece more Sharia compliant and more efficient. And when I say more Sharia compliant, I can imagine it's a bit confusing. It's because it is very contentious, sukuk in general, the structure. So there's a lot of scholars who don't agree with it. There are some that do. We want to be as strict as possible with Sharia compliance. But where do you go if you don't have sukuk, right? So you need diversification. You need something as close to fixed income as possible. And because Islamic asset management is a really small industry and there's not much money, and contrary to popular belief, it's not really growing. So we do have to take it upon ourselves to try and create these nice, new, clean, sophisticated products, because we can. It's a responsibility, and we're absolutely working on that.
The fact that you have figured this out and you've built a profitable business and you're growing so fast might invite other people to put their throw their hats in the ring. It doesn't seem like you're too worried about the banks who might want to use their own funds in it. what about other players who might look at this and say, hey, if there's a margin here to be made, the Bezos kind of quote, like, I'm going to eat that as well. Do you have enough of a head start to kind of make sure that doesn't happen to you, that your margins don't get eroded?
So I'll tell you something interesting, Roshan. So we actually have a ventures arm. And we prioritize investing in potential competitors. And that's not because we can eat them or anything. It's literally, come at us. There's really no one else there. It's really weird. It's been like, 8 years and no one's been able to do this profitably. It is an expensive business. Like you said, we've raised a lot of money because you have to. Good luck getting so many regulatory licenses and building all this infrastructure and running an efficient, credible shop without that initial capex. Now, who in the world has that kind of money to put down? And then to compete with us, right? So we're already quite far along. People know our shareholder base. It's ridiculously deep access to money. So for any normal person or VC or entrepreneur to say, I'm going to head on against these guys who I have no idea how much money they have access to, they're a little crazy. It's a tough pill to swallow. That being said, we have a lot of local competitors. We really like that. We try to help people who want to be competitors. So the Ventures Arm has a mandate. If anyone wants to do something in genuine Islamic finance, we give them priority. We have funded many potential competitors of us. It sounds crazy, but unfortunately, no one's really able to build that scale that they need.
And the ventures arm is the equity crowdfunding arm, correct? So you, the community itself is investing in a lot of these businesses. To wrap up the conversation, because I wish we could go longer, but unfortunately this isn't a podcast, it's a radio show, so we've got times to keep here. You've raised between $75 and $82 million over the last 9 years building this business. Your last valuation was pegged at $300 million in 2022. Investors are going to, at some point, want some liquidity, maybe not, depending on how deep their pockets are. Is an IPO the most logical path forward for you in the longer term in terms of providing that liquidity to investors that may want it?
So, we surveyed our shareholders informally, and the vast majority don't actually want liquidity because now we're entering the fun time, right? So if it works in 3 countries, it works in 50 countries, right? Go multiply this by 10, multiply by 50. We know we can. So most don't. A few very early investors, like really minority, do want liquidity, and for them, it's still not their exit of the fund horizon, so there's a few years left. And we do think the most organic way is an IPO. That being said, we're not a VC-controlled company, so no one can force us to do anything. It's just our responsibility. We took people's money. We know it's a for-profit business, and we represented certain things, and we absolutely need to try our best to try and bring them liquidity if it doesn't hinder business. Now, an IPO for us is actually very wise, not only for the liquidity piece. The main reason is we actually want this to be a community-owned product. We don't want random governments owning Wahid. We don't feel that institutions can have the people's best interest in mind, and we want the Muslim community themselves to own Wahid. And the cleanest and probably the only legal way to do that is to IPO, so that you are allowed to sell your shares publicly, and then the entire extended community can own the company, almost like a cooperative. I feel that's the safest way for something we're trying to build. I would not want our company to be controlled by a sovereign that, who knows, right, might change leadership and do anything. So we do feel an IPO is nice, it's safe, it brings credibility, it brings PR, it brings liquidity, it brings everything. We're really not price sensitive. If you build a company with strong fundamentals and nice long-term horizon, no one cares about the value, right? It can be whatever. So we do not optimize for, can I get 100 million more here or there? It doesn't matter, because if we're successful in our 10-year plan, 20-year plan, none of this is going to matter. Whether it's 500 million, a billion, 300 million, makes no difference in life. And I think people see that. It'll just change IRR slightly for an investor, but really nothing material. If it works, it works. And that's how we're seeing this.
In the meantime, as you head towards that, and you are next, you got the fun times ahead. Do you need to raise more funding for the fun times ahead?
So we're in a weirdly good place where we don't, right? So that's why we can act tough and kind of king of the hill. But yeah, we haven't given up control of the company till today, and now there's no way we plan on doing so. So I think if we do raise funds, it will be only strategic, like, and by strategic I mean really strategic, like someone who will bring nice diversification to the cap table, or really help us de-risk in some form. Obviously, in with our growth rates, with our potential market size, you want to raise money, but it's more of a luxury raise, so it has to be on our terms, and we're lucky we've been able to do that all along, right? But if we do, as we are, maybe in a few years to IPO, right? Who knows when? Then you wouldn't want to really raise too much now. You wouldn't want to dilute. You want to keep that open. So we're in a good place. We have time. We get to try new things, and we can see.
Junaid, it's been a pleasure speaking with you. I really do hope we get a follow-up conversation at some point. Thank you for your time.
Thank you, Roshan.
Folks, I've been speaking with Junaid Wahedna. He's the founder and chairman of digital investment management platform Wahed. And if you miss any part of the conversation, you can catch the podcast on the BFM app, bfm.my, or wherever it is you listen to podcasts. Just look for Open for Business. I'm Roshan Kainis, and you've been listening to Open for Business here on BFM 89.9, the business station.